Excellent, excellent. I can't wait to talk about the news today. There's always more craziness, and
Oh,
those Republicans.
oh yeah, good stuff. Well, I wanted to do this first. So the stocks had kind of a bad week the last week. It's gotten a little bit better today, but the kind of the anticipation about why it happened and all that, people kind of saw it coming. Um, but here's a guy named Eric Johnston, and he's on CNBC, and he's got kind of an interesting take where he's trying to spin this in a specific way, and I don't know how well it works, but we're gonna go ahead and just look at him real quick.
Is in the eye of the storm today. Just what's your broad view on what we're witnessing?
Yeah, so I think the big story here is what's going on in the rates market. And the reason why it's important is that today, inflation break-evens are actually lower, meaning the market thinks the outlook for inflation is actually lower. And there's been very little change in Fed expectations. So the entire move higher in yield is all real yields moving higher. And they're moving higher because of this deficit and debt issue that we had.
So I want to clarify this real quick. So the yield situation, the bond yields is basically the interest rate on the bond. So they've been going up, and he's got a weird take about why they're going up, and then we'll kind of break that down. But he's saying it's because of the deficit and the debt.
So the market has and the economy has absolutely benefited from the deficit. We've talked about this for a long time. We're running a $2 trillion deficit, and that has been a stimulus. But if it was that easy just to run a large stimulus and, of course, or a large deficit, there's obviously a downside, and we're starting to finally see that downside. And that's what's happening with yields moving higher. So, you're seeing it across sectors, and, we've seen the financial situation show up back in February, March. We've now seen the utility situation show up as of last week. And
so anyway, we'll cut him off there. But this is where I think that's interesting, is because so he's saying it's just a weird argument. So yields are high, and that's somehow negatively affecting the stock market. But yields have been high for over a year now. And they've been going up for over a year. In fact, things like in the housing market, it's now 7% is the interest rate to buy a new house. It's going to probably go up to 8%. But it hasn't slowed down people buying houses that much. I mean, sales have gone down some, but the net profit is still up. So it's kind of a weird argument to say, okay, well, it's the debt and the deficit. Well, what happened with the debt and the deficit recently that would cause the stock market to all of a sudden everybody to back off? It doesn't make a whole lot of sense. I mean, I don't know what you think, Lace, but I just thought that was a weird argument on that. And I think what he's doing is, kind of typical for CNBC, but it's the conservative argument that we need to reduce spending, and that'll help the market out. That'll help out the economy. Well, the problem with that is whenever they say this, like, oh, it's the debt or the deficit or reduce spending, what they're really talking about is cut food stamps, cut education, cut Social Security, cut healthcare. That's what they're talking about. Because it's funny.
Well, of course, none of them actually directly ever want to say that.
No,
they never actually want to say, here's the laundry list of things we want to cut.
Right.
they're gonna just blow a big poof of smoke out there and be like, we're magically cutting things.
Right. Well, that's you nailed it, because if you ask like Americans, does the government overspend? Like 60% of Americans go, yeah, the government overspends. But then if you start listing the things that we can, that they want to cut, then Americans start going, well, no, we shouldn't be cutting Medicare. No, we shouldn't cut Social Security. No, we shouldn't cut.
I mean, let's be honest, it's not that different from when people are going to try to cut from their own personal budgets, right? Like, oh yeah, totally spend too much money. Okay, so which of these categories are you going to cut? And they're like, well, I mean, like, I can't cut that, and can't cut that, and can't cut that,
Right.
So there's just people are, they want to say one thing, but then when it gets down to brass tacks, they're like, I don't actually want any of this to go,
Right.
And you don't have to think that,
Right. It's one thing to ask the broad question, am I overspending? Yeah. Does the government overspend? Well, I feel it does, right? I don't think so, but 60% of Americans do. But then it's like you said, once you get down to the nuts and bolts, people are like, well, wait a second. You're taking what away from me?
I don't want to cut food.
Right.
Right?
Well,
I don't want to cut security. I don't want to cut health care. I don't want to cut,
But that's what's going on. And it's kind of a weird thing, too, with the government shutdown recently that was just narrowly averted. And we'll get into that more later. But he's almost arguing that we should have shut down the government and made all these cuts that the Republicans proposed. My favorite was cutting 80% of funding to underfunded schools or underprivileged schools. So we're going to cut 80% of federal funding to the poorest schools in America. I mean, it's literally, let's take away the poor kid's top ramen so the rich kid can, afford his prime rib. It's like, I mean, it's just the weirdest. But it is.
The funny thing with people's idea that the government is spending too much and they should just cut all of this stuff. It's kind of easy for them to say it blindly, not really considering what areas they're going to cut to, because they very easily feel like those cuts are going to affect somebody else, not me. That's I think there's this idea that it's like that it's different than my personal budget. It's not like you're cutting my food. You're going to cut other people's whatever. First of all, they don't know what it is. Second of all, they don't think it impacts them directly. I think so they'll blindly go with it.
Well, I think the other part of it too is a lot of conservatives they're kind of evil, not in the sense that they're willful. I mean, they think what they're doing is right, but they think, well, if we cut it from them, then they'll learn to take care of themselves. But if we give them a benefit, then they'll just rely on the benefit forever. Right. That's sort of their mentality, when the reality is no, if you teach them how to fish, they'll take care of themselves. But if you cut all their funding and they never learn to do anything, then they're kind of worthless, which is the other side of the coin, right? Which is my argument, which is no, you have to fund all this stuff. Otherwise, you have a much more crippled society. Right. But that's the thing. And I think he's trying to spin it that way. He's wrong, by the way, everybody. Just to make it blatantly clear.
Wait, we're not agreeing? We're not agreeing with him?
I'm not agreeing with him. That's
okay.
I'm agreeing the stock market went down and yields are high. But there's a reason yields are high. It's because the Fed has raised rates for the last year. And rates are higher than they've been in 20 years. And then what happened last week was the Fed, not last week, a few weeks ago, the Fed said, we're going to keep the rates higher for longer. We probably won't raise them. We might, but they're probably not going to start going down until sometime next year. And so this higher for longer thing spooked the market because it means everything's going to be more expensive. Getting loans is going to be more expensive, which hurts businesses' ability to expand and do research and all kinds of other stuff. So that was part of it. And then what happened was there's a jobs report coming out soon, but the sort of the front end of the jobs report was a lot more jobs were created than we anticipated in the last month in August, right? Well, if that's the case, then that means that it's tight in the labor market. There are more and more jobs than there are people to fill them, which means now employers have to compete for labor. So they have to start paying people what they're worth. They can't underpay people because people are desperately looking for work. Because if there's lots of jobs, I could always go find another job if you're not going to pay me.
Right.
If there are not a lot of other jobs, I got to take what's just there if I want to make any money and survive. So that's what's going on. And that's just a Yahoo article that I found from Bloomberg. But that's what's going on here. So just in this article, investors find little reason to buy stocks as rate fears spread. And then it goes down to this S&P 500 plunged to its lowest level since Tuesday, blah, blah, blah. The turbulence was sparked by a surprising increase in U.S. job openings, something Jerome Powell has been watching as the Federal Reserve tries to tame stubbornly high inflation. Well, the guy mentioned at the beginning of the video, inflation's still going down. So The Fed's not actually taming inflation. They're just trying to squeeze the job market. That's the only thing they're trying to do. And they think by squeezing the job market, then that'll slow the economy and that'll tame inflation. Well, the job market's still expanding. The economy's, still doing really, really well and still growing really rapidly. But inflation is going down. Right? So the Fed can't say that they had anything to do with that. But now that jobs are opening up, they're going to say, well, look, that's going to speed up the economy, so we need to raise rates. And that's what everybody panicked over. Because if the Fed raises rates again, it's going to make things even more difficult. So that's all that it was. But I love how he goes on CNBC and it's the debt and the deficit. I'm sitting there thinking to myself, what does the debt and the deficit have to do with the stock market? Ever? Does the average investor, do the big banks, do they care if the government's $25 trillion or $30 trillion in debt or whatever it is?
Right.
Do they care? Have they ever cared before? Did they care when Trump ran it up by almost $8 trillion? Did anybody blink an eye? Did that affect? No, the stock market did really well up until COVID.
Right.
So I don't know.
Absolutely, in the loosest sense of the term, the only thing that I can think of is, if there's some sort of movement on that suddenly makes people's confidence change in a huge way. But I don't see any sudden big enough movements happening that would change people's perspective in a large enough way to have an actual impact, if that makes sense.
Yeah, and I think it's a boogeyman. It's not real. But ghouls like this guy are real that believe that. And then what do? They want to hurt as many poor people as possible to try and fix it. Which is what makes them sort of evil. They don't realize it. I believe that, honestly, Hitler thought he was doing the right thing. I'm sure he didn't get up every morning and go, wow, I am one twisted motherfucker. No, I'm sure he got up every morning and said, yeah, let's kill all the Jews. Good job. Yay me.
Which is such a weird thing to say.
No, I know.
But the truth is, I agree with you. I think many times when people do these hugely damaging things, they somehow have this idea in their mind that they're doing something for the greater good.
Right. Whatever that might be in their
mind. That might be.
The greater good in their mind might be something horrible. But anyway, I thought that was interesting. Anyway, if a guy tells you, like that guy said, hey, this is causing this just because, which is basically what he said, then you need to start and go, wait, why? How is that causing that? You got to draw a line for me. Because I can't just take your word at just because. Right? No, there's a reason. So we'll get into something more fun now. I just thought that was interesting because I saw that.